I actually recently learned that John Templeton was also a student of Benjamin Graham's, like Warren Buffett. Fun fact. I have a couple different things that John Templeton has said. The best answer for when to sell John Templeton came up with was to sell when you have found a much better bargain to replace whatever it is you're holding currently. He also said he never followed the crowd, and his philosophy was to buy when most people, including experts, are pessimistic, and sell when they are overly optimistic. If he couldn't find a more attractive stock to buy, he would hold on to the stocks he had. Opportunity cost. Makes sense. And finally, this is actually a quote, "Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. The time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell." I would ask all of you just to, answer for yourselves, but feel free to let me know what you think or what you came up with. What time period, or what period rather, are we in now? Are we in skepticism time? Are we on optimism time? Are we in euphoria time? Where are we? Because depending on where you look, you probably find different answers. But I'd love to hear your thoughts. Send me an email, franco@cmqinvesting.com, franco@cmqinvesting.com. Would love to talk to you. Hit me up. Howard Marks, another one of these legendary investors, great thinker, great writer, says, quote, "The time to sell is not now, when everyone has a long list of problems and stocks are down 10, 11, 12%. The time to sell is when everyone says, I can't imagine anything that could go wrong." I know I said the time to sell is not now. This quote was not from now, so just make sure you know that. But Phil Fisher,
Philip boy,
Warren Buffett's, I would go on a limb and say his favorite investing author. Fisher has 3 reasons for selling. 1, if a mistake was made in the original purchase. 2, the stock no longer qualifies with reference to his 15 points. Side note on that. Side note. I'm going to be putting together that 15 points in the form of a checklist that you will be able to access on our newsletter. You can access it at cmqinvesting.com, or if you just like to type more, it's cmqinvesting.substack.com. Sorry if I keep dropping email addresses and domains, but it's important that you know this. I want you to be able to engage with us, and we can grow together.
weirdo.
Finally, the third thing that Phil Fisher says is a reason for selling is when a more attractive stock is identified.
And number 4, if you just wake up and you're in a bad mood, just sell that.
We're hearing a theme here, opportunity cost. Because if you sell, well, what are you going to do with the money? Seth Klarman, amazing investor. I'm starting to learn a lot more about him. I'm going to finish off with this quote from one of his letters to shareholders where he actually kind of answers that question. Quote, "We will not stray from a rigid value investment discipline. We buy absolute bargains when they become available and sell when they are no longer bargains." Okay, well, I have one more here. Peter Lynch. I didn't write out his full quote. I watched a video. Peter Lynch makes a great point. First and foremost, you got to remember why you bought the stock. Something I like to do, and I actually do this personally. Before I buy anything, before I buy a stock, not like a pair of socks, I will write down like a paragraph of why I'm buying it. It's really simple, but it forces you to slow down and actually put your thoughts out. And then if it does well or doesn't do well, you can go back and understand why you did it. Because it's really about the process and your thinking process. The results can stray from the quality of your thinking. I find this just helps a lot. I recommend doing this. I think Warren Buffett also says too, but don't listen to Warren Buffett, right? Listen to me. I'm the guy. But Peter Lynch says, know why you bought the stock and also what inning you're in. He uses this baseball analogy. It could be the fact that a company is entering maybe a maturing phase and there's not a lot of upside in growth and you've ridden most of the growth up to that point. I don't think that's the case with Viacom CBS. There's a big international opportunity for streaming video on demand in the next 4 years, and I think they'll do pretty well. If you want to know my analysis of Viacom CBS, I'm going to put that together on the newsletter, so just a heads up. Now, what would Charlie Munger say? I don't have to look at any notes for this. Charlie Munger is an opportunity cost guy. So if there's something better that you can do with the money, well, then do it. But he'd also probably say there's huge mathematical advantages of doing nothing. Because we have to think about the tax implications. Short term, I'm paying short-term capital gains tax. That's a big bill. If I hold on to it for a year longer, my tax bill goes down pretty substantially. So I should probably figure out where I need to be in order to make holding it still better than what it would be if I sold right now and paid the higher tax rate. Now, one decision you should not make is buy something because it's been going up, especially if you haven't attempted to value that business. So let's say you take a position in Viacom CBS, it's 10% of your portfolio. And I was reading some stuff on one of these stock forums where people in February were talking about jumping in Viacom CBS. You know, if you went down, like I said earlier, the most extreme example, if you went down 50%, you have to make 100% back to get even. Think about it. If you go from 100 down to 50, that's a loss of 50%. But to get to 50 back to 100, you have to go up 100%. You have to double. So be very careful with taking losses. You don't want to take losses. I mean, there's always volatility, but something like this, if you're not aware of why you bought it, if you didn't think it through, if you didn't value the business, if you're just trying to play this momentum game, it's eventually going to come to an end.